How do you reposition your real estate business to fit today's market? Stay tuned. Welcome to this week's edition of NoteSchool TV, episode 235. And today we have a great guest from North Carolina. We'll bring him on in just a minute. But before we do, let's do a little housekeeping. Number one, make sure and like this episode. Yep, hit the like button. Share this with your friends. Share it with your business associates. Just everybody you know. Number two, if you have not already subscribed to the NoteSchool TV channel, make sure and do that. We have 235 episodes for you to choose from. And number three, hit that bell notification so that you'll know when we go live. When? Every Wednesday at 11:05 Central Time. Also, if you have questions or would like to know more about what we do at NoteSchool, well, just go to noteschool.com/TV. Again, noteschool.com/TV. And with that, I want to bring on NoteSchool's founder, our chief visionary officer, really busy guy, my friend, Mr. Eddie Speed.
That's my new motto, isn't it, Joe?
It is your new motto. Hit the road, Jack.
Joe, I just finished a meeting with a very high-level operator in the loan origination business. And I said, and he's a long friend of mine. And I said, dude, I've struck gold. Like this whole market and people looking at seller financing versus rentals, it's struck gold.
Yeah.
And I really think that's a truth. And we'll have a lot to say about it, continue. And we're teaching a lot about it, helping a lot of people apply this, whether they're realtors or real estate investors. Our guest today is got a good example of that from his family, and it has a story, but the note application of the best thing to do in the market is definitely taking life. So it has got me busy. Somebody asked me the other day, well, said, Eddie, I thought you'd be sunsetting your career. And I'm like, and what would I do?
I know, right? That's me.
I can only go take off so much. And my wife loves her house and her yard. And that involves a list of which I'm not very good at.
Yeah.
And I think I'll just keep fixing deals, Joe.
I think so. And Eddie, you and I are going to be, we're going to be busy the next 30 days. I'm going to be in Tampa and Grand Rapids and Memphis. And so it's, and you've got the same schedules.
I got it. We're rolling the tires. It's a good time to do this, and we're excited about it. And I think our guest today will give us a good reflection of a guy that kind of looked over the fence and saw this and had the vision of doing it. And I give him a lot of credit for that. So we're going to get into that, Joe, and see you in a minute.
See you in a minute.
All right. Our guest today is a savvy real estate investor. And so people ask me a lot, like, what's the normal NoteSchool student? And it could be a doctor or a dentist or a business owner that isn't necessarily super seasoned in the business, or it can be somebody that is super seasoned in the business and they're essentially looking at the market and figuring out how to reinvent themselves. And so I think you'll find our guest today very interesting because he's a savvy guy. And I think we gave him a glimpse of it, and he was a good visionary for his own businesses and said, hey, I need to really do this. And I think it'll be fun. So you guys welcome Matt Lees.
Hello.
Good morning.
Good morning.
How are you?
I'm excellent. How are you today?
I'm good. I'm good. I am, as you know this, Matt, you're kind of hanging out with us a lot, and we got a lot going on, and we're glad that we do. And we're glad that the market is really giving us a reaction. And so we're going to talk about how it kind of relates to you.
Okay.
So give us a little history. What did life look like before you came to NoteSchool, real estate wise?
Well, boy, I've been in real estate almost since childhood, but in one way or another. But the time frame just before I actually started to get involved in NoteSchool, I had started in the beginning of 2024. I transitioned from being a a realtor with my son-in-law and daughter who used to flip about 28 homes a year. And then they started doing building of infill lots, and then they moved on to custom homes. But about this, they asked me to come on board to help them when they were busy. My son-in-law was a realtor, but he couldn't keep up with it all. So I came in and filled that role. But then in the first of the year of 2024, I decided I wanted to get back into my own personal investing again. And so I went full time and really sort of have been focusing on a niche, the pre-foreclosure market. I like the idea of being able to help people that were, struggling. And so it sort of filled my emotional desire to help people, but it was also an opportunity to buy some homes and to flip those homes. And so the only problem with that is I do want to develop passive income for my latter years, which I continue to fight against. So that's my goal. But at the same time, I need some today money. So it's the combination of both that I need. But I did not want to be a landlord. But I had resigned myself to, okay, I just have to suffer those consequences. And then Note School came along and the bells went off, and I could see how that was my escape from the landlord hell.
Well, you hear us talking about it a lot, right?
Yeah.
We've whether it's somebody from the realtor background or the real estate investing background, or somebody that's just been pretty, owned a few rentals, but really does something else to make a living, right? It's all the same thing, right? We're trying to figure out what to do in today's market that seems to model the best. And we seem to see more people than we've ever seen. And I don't know since when, Matt, but people are landing on this. They're landing on notes. Maybe we've gotten better at explaining it. Maybe the market's just gotten that much better, right? But I think it's a combination, and we're glad you're here. I'm always honored to have somebody with a little gray hair, which means experience, right? And I'm always glad to see that and think that we are having an impact. And it's kind of a fun time for us. I think you could imagine that. Like, we feel like we feel like we're solving a bigger industry problem than we were solving in the past.
Sure. I understand that. Yeah.
So let's talk about like where you started seeing notes and like what this evolution looked like. Most of our trail that people start at with us is they hear us do some form of a training. Usually it's an hour to 3 hours, right? And then we introduce some ideas. We sort of say what's possible, and then they trickle down the road and they come to a class. And I want to talk about that path a little bit, because once again, I think the audience gets this. Like, you're a savvy guy. Like, I mean, we can go fast with you, but we forget sometimes that we're so used to thinking this way. And now you think this way. You forget before in real estate, you weren't thinking this way.
Right.
Talk about that.
Yeah. Well, our mutual friend, Tim, is a member of the RIA that I attend. Yep. And so he kept showing up. I probably went to like 3 different meetings where he sort of did the modeling of note opportunities that you do, or we do now in Note School. And, it's sort of like learning a different language. I knew it was good, but I was like, what? It piqued that question. Boy, that sounds good, but I'm not sure I get the whole concept. And so obviously then that led me to, starting to search you out on YouTube. I love your, the monthly market reports. Think they're really exciting, but you started to open my eyes to a little clearer, but you can only go so far. So I decided to attend the Note Expo, which I believe was in the month of November.
Yes, sir.
And then from that, I signed up for the boot camp and got a little deeper understanding. And so since that time, I have been juggling between my pursuit of the foreclosure business and finding time to really study and understand notes further. I still have a long way to go, but I'm still as excited about it as I was when I was coming out of the boot camp. And so looking forward to I know that I can implement it into my business when I find a home to flip instead of flip it and sell it.
Noted.
There's ways for me to get a cash flow and some today money. So that's the obvious. But then the whole landlord tenant thing is, I had rentals. I mean, I know I didn't like it. I was only submitting to it for my future out of like a necessity that I didn't want. So it's almost like, thank you, Jesus, I've been saved again, you know?
Mm-hmm.
So.
Well, I definitely remember your coming to a class, and it was exciting. And I remember us kind of going through the story, and we did some modeling at the class for some assets, and then you subsequently brought it. So let me frame this up for the audience if I can, right?
Sure.
Here's the industry problem. The industry problem is people's houses doubled in value, but their income didn't change, right? In other words, your house went from being worth 150 to 300, but your net income wasn't any more than it was in 2018. And the reason is because you didn't get paid for the equity. You had a lift in rents, but nothing close to double. About 20% is what most people calculate. It went up a little more, and now it's level back out. And it seems like it's about 20. That's what people, number cruncher types, tell me. But the bad part is your expenses went up by 50%. Right? So what happens is that you have equity, but you're not getting paid for the equity. So used to be, the theory is, you remember this well, Matt. The theory is you got about an 8% cap rate on a rental.
Yep.
Now the cap rate is 4 or less on the same property, and you find yourself trying to eat an equity sandwich.
Right.
Is that a truth?
Yeah, that's the truth. Yep.
And so this is, listen, we're not making the news. We're just reporting the news. No, Matt, you and I didn't cause this market condition, did we?
No, thanks goodness.
But what we get challenged with is, what do we do with it? And do you just keep doing the same thing that the general public says, you just keep doing this because this is what you do? And you're like, whoa, whoa, whoa. If I'm earning a 4% cap rate on my rental, and I could earn a 10 or an 11 on the same property, just doing something different with it, shouldn't I do the number 2?
Right.
And that's where you brought your, as you said, your son-in-law and your daughter, savvy in the business. Like they're very sharp. And you recently brought to a deal lab this very scenario. So let's talk a little bit about that math.
Okay.
What was fair market value?
Yeah, this was a home, you know, like I said, at this time they were flipping homes and holding on to the good ones. And so what he told me, the current fair market value would be about $400,000.
All right. So the house is worth, this is in the Raleigh area, right?
Yeah, a suburb of Raleigh. I believe this one happened to be in Cary, which is a very desirable suburb.
Yep. So Raleigh, North Carolina, great area, but it's pricey.
Yes.
What does it rent for?
$1,600, I believe it was $1,500, $1,600.
Okay, let me think about this math for a minute. You got a $400,000 house that's gross rent is $1,600.
Seems crazy, doesn't it?
Does that seem like a good math?
Well, yeah, it's great math.
That's that equity sandwich we're talking about.
Exactly. Yeah.
Right. It's hard to eat it, isn't it?
Mm-hmm.
It's hard to get paid for it today. So we modeled it. Now they had just rehabbed it. It's really slick. So they're not assuming expenses that others might assume because they've just spent all the money. Right. So at the moment, and once again, this isn't averaged over 3 years because we don't have 3 years worth of numbers yet. Right. But they're thinking that they have an inordinately high income compared to gross rents because of that. Right. And that's not like completely crazy, right? Because they've already just spent a lot of money fixing it. So now they're thinking they're netting about $1,000. Okay.
Right.
Is that true? Close to that?
It is. Yep.
You brought that to the deal lab when we modeled it, which we do a lot. And we took 400,000. We took 15% cash down, right? Which is a good amount of money.
Yep.
Right. And it's 60 grand, right? So you're taking 60 grand off the table because you got that in down payment.
Right.
Then you're financing the balance. And we took a non-qualified mortgage rate in the market. So we're not like making up seller financing like nobody else would do this. 40% of all loan originations today are non-QM loans, non-qualified mortgages. Okay. So we tapped it at a market rate of 10%. So this isn't a Fannie Mae rate. This isn't FHA. This is, but 40% of the market is paying this interest rate. Okay. Payment's $3,100. Let me think about this. 1,000 or 3,100?
You don't think too hard.
1,000 up front.
Yeah.
You kind of don't need a calculator, do you?
Right.
This is a typical rental that we model every day of the week. And Matt, what's funny is, and because you know, I help a lot of super seasoned guys like you a lot, right? And it's kind of funny. I mean, like I'm on calls like all the time, and people are like, "What?" Like, yeah, it's just the math. I mean, we just model it out. We've got spreadsheets and all that stuff that'll do it. We're not making up numbers. We're just plugging in the numbers and saying, this is the house you can rent it, or this is the house you can sell it. This makes $3,000 a month and $60,000 up front, and this makes $1,000 a month. Same house. Crazy, isn't it?
Yeah. It's pretty clear choice as far as I can see.
So we even talk about what we used to call them burnout landlords. Well, a burnout landlord is kind of done, right? Maybe they're just done with real estate because they're so burnt out. Maybe they're not quite burnt out yet. They're just a questioning landlord. What else could I do?
Right.
I think that's where your son-in-law and your daughter were on this deal, right?
Yeah, I believe so. Yeah.
All right, so let's look down the road. Let's look down the path. You've added this to the business. Clearly, we think market timing has a lot to do with it, right? So and by the way, I believe, let me challenge a model, Matt.
All right.
You're very familiar with the Burr model, right?
Oh, yeah. Yeah.
Okay. So for the audience, it's buy, rehab, rent, refi. That's what Burr stands for.
Right.
Buy, rehab, sell, owner finance. I think that math is going to crush it over the Burr math.
Absolutely. I totally agree with you.
What? This old man is crazy, Matt. Like, they look at me and think I'm out of my mind until somebody like seasoned like you runs the math and he goes like, yeah, he's actually right.
Yep.
All right. What do you do with this? So the market's changed. There's a way to reinvent yourself. People are watching this. They're watching you. They couldn't listen to you and not be impressed. That's me saying it. That's not you saying it. Okay.
Thank you.
So give us some clarity. Where did your vision take you?
Well, like I said, it was, it started off just with my, mindset of, finding homes, renting them. And, I was thinking, well, I'll sell them, I'll just take the chunks of cash. I'll accumulate that cash so that I can then have a home either free and clear or very low debt, and then almost sort of force some positive cash flow out of it. That was my original strategy. Getting exposed to notes really just opened it up. In fact, it almost opened it up so much that in some aspects it created a real tension between what I'm doing now investing all my time on prospecting for pre-foreclosures. And I see these opportunities of, hey, I don't necessarily have to do it that way. I could spend that time developing my note portfolio and those opportunities. So the thing that is so exciting about it is the number of, how you can recapitalize, how you can sell and get a cash flow or sell a partial. And for me, I'm older. I look at a partial as I'm putting my portfolio, that cash flow down the road, really for my legacy with my grandchildren, And
or you could sell a part of your monthly payment and keep part of your monthly payment. Right. So now all of a sudden, if you want cash flow, you can make the math look just like a rental. But when you recapitalize, you're not getting all of your money back. But compared to a BRRRR, you're going to get a lot more money back.
Oh, yeah.
And keep the same cash flow. And so, I think it's funny. Like, I want to go back to the class a little bit.
Okay.
Right. So once again, our old pal, Tim C. Blank. Let me just tell you something. He's smart. He's street smart, and he's a good deal guy. And I so appreciate him. And he's been with us a long time. So all these, he's morphed with us. As the market's changed, we did this, then we did this, then the market changed. We do, like, we're constantly trying to read where is our best application in the market. I think this one for seller financing is probably the best I've ever seen. Like, really? Like, no, seriously, the best. In 45 years, there's more people that have an application of seller financing than I've seen in my career. That sounds crazy, but I've got landlords coming at me in groves because of this. What about when we create a lot of inventory? Does that help you, Matt, with notes to buy?
Oh, absolutely, it does. And also notes for me to buy and be able to, expose other people to the opportunity to invest in them. I've been amazed here just the last month. I've felt like I've got enough knowledge to go out and start just mentioning it, like you've encouraged us to do. Just talk about it. I have yet to have one of these people say, and they're not all real estate. Most of them are just business people, and they go, wow, that's really interesting. They want to meet with me to sit down and talk about it. So, it's an opportunity really to help other people get with their investing also.
Yeah, it's a market situation that if our job was to have the vision, it was possible. I look at it. That's NoteSchool's job. NoteSchool's job is to show financial modeling in a way to compare it to rentals and looking at a note and saying, oh my gosh, now we can compare it to a BRRRR model, a rental that hasn't even turned into a rental yet.
Right.
But the same math you would have made a rental. Now, all of a sudden, you're like, wait a minute, could I note that and create more cash flow, more profit, less aggravation, all of that, right? And so there's existing rentals. Then there's what you're now going to turn into a rental, right? A brand new deal that you would buy, as you said, right?
Mm-hmm.
And so I think, so I want to go back, because one of the things people say, what's the magic in a class? Let me say what I think the magic is, but I want you to correct me if you don't see it that way.
All right.
Okay? The magic in a class is we're very good at financial modeling, and we show people what's possible.
Absolutely. You take what is what we all hear is just sort of the background of what we've learned about lending and mortgages from I need a mortgage standpoint, to really understanding like the back office. What are the banks doing with those things, and how can we apply those same principles and be the bank? Yeah, it sort of opens your eyes to that.
And we show people then how to recapitalize their business, because people think, well, I'd buy mortgages, but I'm going to run out of money. And if you do it right, you don't actually run out of money, because you then recapitalize and sell enough of the note to propel you forward. Right. And so that's the things that when I say this is what's possible, and there's various techniques that are kind of old to us at this point because we've been doing it so long. But I've realized even somebody as savvy as you, and you clearly are very savvy, Even somebody as savvy as you, you're like, you get it really quickly when we show it to you. But you're like, I hadn't thought about that.
No, you're absolutely right. It definitely opens your eyes up to a lot of different things, strategies that you can use the notes for. That I was not aware at all that had those. I didn't know you could sell a partial, or I didn't know you could sell part of a cash flow.
Yeah.
Really, I sit around at night very often thinking, would that be possible to do that? Can you do that? And I mean, it really opens up your mind to, wow, can you? I got to see if that would work.
You see the smile on my face?
Yeah, I know. It brings you joy, doesn't it?
This is when you start realizing that you're imparting in a student body the idea of what's possible, because you start thinking outside the box.
Yeah.
And so this is where I've been for a long time. It's where Tim Siebelink's been for a long time, right?
Yeah.
And it's just fun to see smart people come in that start innovating their own ideas. And of course, we get a chance to beat them up, because there's sometimes we'll be like, yeah, Matt, that's perfect, except change this 20% or whatever that is in the story, right? Mm-hmm. And so it's fun to do that. Now, I know this is fun. Believe me, I do it every day and I am enjoying it. No kidding. But we really do this for our future, right? We really do this to accomplish things in life. I want to talk about your why a little bit.
Okay.
What does that look like?
Well, I shared a little bit of, I'm in a position where I do need cash flow, and I want to build, I need today money, and I need both. But the real motivation, I've always thought it was, my dream in my real estate investing is, it used to be, I have 4 children and I have 10 grandkids, and I've always thought, wow, I would like to leave. What do I want to leave for when I'm not here on this earth? What would I like to leave? What would I like my legacy to be? And I'm really close to all my family. We have a great family. I'm already imparting my life, my values, my beliefs into my grandchildren. I love doing that.
Yep.
And but you also want to leave an inheritance. And so my vision was always, I think it would be so cool to be able to, when a grandchild maybe graduated from college, or maybe were getting married, to be able to be able to start them off on life with a house. Maybe not a grandiose house, but I mean, I've always loved the thought of giving them their first house. And then I started, when I got involved in Note School, I started thinking, wow, why would I want to give my kids a problem when I could give them a portfolio? And so that I just see there's opportunity. Maybe if I was giving them one house, but maybe I can give them several mortgages that would be an ongoing cash flow to get them kicked off in life. That's what I would love to do. That's what my hope is.
It's a lot easier to be the bank than a landlord. Is that true?
Oh yeah.
Okay. Yeah. So the problem that I see over and over, this is now 4.5 decades into this industry, right? Rental portfolios don't inherit very well.
Yeah.
Right. Most of the time, the grinder, the guy that built it, right? Then all of a sudden he's trying to pass it downstream, and it doesn't.
They don't want it.
They don't want it, or they don't know what to do with it, or even if they have the best heart in the world, and they're saying, Dad built this, and I'm going to go stick with it and stuff. And I'm just telling you, it usually crumbles. Yeah. And note portfolios don't crumble.
Yeah. I believe that.
And that's why, for me, I've taken, and once again, my kids are now grown, as yours are. My kids are now grown, and they are investors in notes. They don't make a living doing this full time every day, but they're investing notes. This is their strategy to grow wealth. Instead of having a rental strategy, they have a note strategy.
Yeah, Eddie, the other part of that is that you're not only leaving them the notes and the cash flow and the benefits of that. What I have begun to see is that my experience in real estate, I have followed the Burr method. I've owned rentals. It's sort of what is the mainstream strategy. And I've been in our RIA, and I've seen guys just like really bright shooting stars, and they're saying, they're talking to the whole group, I've got 126 rentals in the first 18 months, and I've got this cash flow. But you give it a couple years, and pretty soon they have totally changed direction, and now they're building properties. They said, oh, that didn't, their story changes. And so I just feel like my part of my search and pursuit and adventure in real estate is maybe I can show and present my children, who are probably they're all investing in some aspect, the best way. Maybe dad or grandpa is able to show them, how to invest the very best way there is. Be the bank, not the landlord. So I think that's a great heritage to be able to pass on to them. They can live off my travail.
Matt, that is a great why. That is a great why. And my wife and I embrace that, right? And you know that. But I think it is a great why. It is a truth. And your story is inspiring. I feel inspired, right? And I commend you to be at your age and your level of seasoning, to be willing to reinvent yourself and learn something new. That, my hat's off to you for that.
Well, thank you. Yep.
Mr. Joe, I'm going to let you come on and close us out.
Sounds like a plan. Matt, somebody once said that you don't know what you don't know until somebody that does know points that out to you. And that's what we that's our motto too at Note School, right? That's what we do. And you got a big smile on your face. Great interview, guys. Great interview.
I enjoyed it. Thank you very much for having me.
Yeah. So thanks for being here. Tell Mr. Tim Siebelink hello from us, and we'll see him very soon. So we'll wrap this up. Thank you, Eddie. Thank you, Matt. So another great interview, guys. This is just what we do at Note School on a daily basis. So again, if you have any questions, want any information about what we do at Note School, simply go to noteschool.com/TV. Again, noteschool.com/TV. Next week, 11:05 Central Time on Wednesday, we'll have a little lesson for you on some of these numbers that we talked about today. So we will see you same place, same time next week. Be safe and have a great rest of your week.